What's up, guys? So right now, what's going on in the market is lots of volatility. Okay, the markets are down. S&P 500 is down almost 2%. Lots of stocks are down. Lots of ETFs are down, and it's all down because of tariffs. All down because of tariffs. The president basically, the president is putting a tariff on goods, which is basically an additional tax on goods coming in from Canada and Mexico. And this brings uncertainty because nothing happens in isolation. When you do that, other governments are going to retaliate. Canada and Mexico has already said they're going to retaliate by putting a tariffs on goods coming in from the US. So, for example, if an American company is selling, for example, American company is selling products in Canada and US, the price will be higher for the end consumers. And when prices go up, people will, especially on discretionary stuff, people will vote with your pocketbooks. Maybe I won't buy that car. Maybe I'll wait till another year. Maybe I won't buy that TV. Maybe I won't buy that iPhone. So, because of these sentiments, the market is down. So, this is the reason for the stock market going down. So, the question may come up: what does that have to do with me? What does that have to do with you? It's a good question, right? Because you look at your portfolio and you see your portfolio is down because of nothing that you have done. But this is part of investing, right? It's not always going to go up. This is part of investing, right? This is part of investing. So we have to be intelligent about it, right? You have to be intelligent about these situations. We know exactly what's going on. It's not a mystery. The market is reacting to the tariffs. Tariffs come, tariffs go, decisions are made, they change decisions. So what we have to focus on is our long-term goals. If our long-term goals for most of us is to build wealth. Our long-term goal is to build wealth. The markets are down, and like Warren Buffett says, so the markets are down. And the first thing we have to say is that different sectors are going to be affected differently. Sectors that are maybe heavily exposed to exporting goods to other countries, maybe they'll be affected more. Let's say, for example, the auto industry. They ship lots of cars all over the world, right? And maybe they'll be exposed more, right? They're going to see tariffs, they're going to have to raise their prices, and maybe their sales or their bottom line might be affected. So if you're overly exposed to maybe the auto industry, that might be something to consider. Okay, maybe I need to make some moves. But other sectors may not be as exposed. You may be in another sector that is predominantly domestic, and they don't really do, most of their business are domestic, right? Another thing too you want to consider is being diversified, right? You don't want to be overly exposed to one sector or one specific company. So you may consider investing more in ETFs. That way the risk is spread out, right? If you have an ETF with 500 companies, right? You have an ETF with 400 companies, and a few of them are being affected by the tariffs, but a lot of them are not. Then you have mitigated your risk. If you're a single stock, that's affected, obviously that's going to affect your portfolio more. So I remember, and the reason why I'm doing this video, and the reason why we have to think of our long-term goals and don't just have a knee-jerk reaction is because sometimes you may think that you're doing yourself a favor by selling when the market is dropping, but in reality, you may actually be hurting yourself. For example, in 2008, during the Great Recession, I saw my portfolio dropping every quarter like everybody else. And after it dropped a couple of quarters, I just sold. But that was a bad idea because I missed the recovery that came in 2010. I lost twice. I lost once because I sold when the market was down. And I lost the second time because I missed the recovery. Went into like a great 10-year, 12-year bull run where I missed that because I had sold. I don't want this to happen to anybody else, selling now when the market is down because of this little volatility. Obviously, we don't know how long it's going to last, but we have to think for the long term, right? If you have a long term horizon, you're looking at 5, 10, 15 years or more, then this is an opportunity, right? Warren Buffett says that we should be greedy when other people are fearful and be fearful when other people are greedy. So this might be an opportunity to be greedy when other people are fearful. Because if you look now, you're going to see companies on sale, opportunities for great companies that are on sale, that, you have an opportunity to get in at a good price. So don't freak out. Look at your portfolio. Don't freak out. Look and consider your long-term goals. Look at your portfolio and see if your assets are allocated in the way that you like. For example, the percentage of your portfolio in ETF, the percentage in individual stocks, and see if this to your liking. Do you think you're too exposed to single stock risk? You may want to consider some changes, like maybe putting more in ETFs to decrease your risk. But I think, when you zoom out and not just focus on the day to day to day and look out on the horizon, look out in 3, 4, 5 years, and if you can really get into some of these great companies and ETFs at this price and hold for the long term, this may be a great opportunity for lots of us. So tell me what you think in the comments about the effect of the tariffs on your portfolio and whether you're going to sell, buy, or hold. And again, I'd appreciate a subscription on YouTube, and I'll see you on the next one. MD Investor out.